What's up, you guys? Today, Nvidia had a massive day, up 6.53%. And we've been saying for the past couple of days that we believed this breakout would push back up into this market bias level between $118 and $110. The reason for that is when price action breaks underneath the market bias, which is this green and red line, we will normally have a uniform structure. For instance, price will sell off, it will push back to test the market bias, sell off, push back to test the market bias, sell off, and now once again, we're pushed back to test the market bias. This means that short-term structure is bearish. In order for this structure to shift, we would have to take out this high right here at $120. Now today we did have PPI data, which came in very, very soft and cool, which allowed the market to rally drastically. Tomorrow we have CPI, which is Consumer Price Index, which could come in very, very cool as well, which would most likely push Nvidia up over 120 this week, maybe to $122. In that case, I would not expect this rejection to happen. The reason for this is that we've been bullish on Nvidia this entire time. We've just said that because on the weekly chart, which is on your right, because we've been making lower highs on the BX trender, we don't think that the breakout and that this bottom was going to be in until we had confirmation. Well, guess what? If we look at the weekly chart and we look at the BX trender down at the bottom of your screen, you're going to notice that the weekly candle is showing a higher low on the BX trender. Now you have to understand, this candle closes on Friday. We still have basically 3 trading days to go. So as we said before, with PPI coming out tomorrow, we could see price continue to push up. We could close this week with a higher low on the BX trender, and that would be the sign that we're most likely going to break back up to $150 into earnings. However, if the rejection does happen here on the left side of your screen and we reject off of this daily market bias, price is most likely going to pull its way back down to $100. That would meet support at the market bias on the weekly chart, and more importantly, it would keep market structure intact. Talk about market structure a lot here on this channel, but basically market structure is going to be taking your most recent low, which is going to be down at 76, taking your most recent high, which is going to be $140, and then drawing our massive Fibonacci retracement from those levels. And you guys will see here that the area we usually bounce in is called this golden pocket. The golden pocket is so important because this is the area in which Wall Street is finally allowed to start buying the sell-off. And as we said in yesterday's video, we usually don't tap the institutional buying area and just run all the way back up. It's very, very rare, but it can happen. You can see that last time we had this pullback, we did just that. We actually just hit that bottom and continued to run for months and months. This could happen here, but at this moment, I think there's a really good chance for a small short position. So I actually do have puts currently on Nvidia. I called them out earlier this morning and I am down. I put them within our Discord community and I said the reason that I was going short is for the same exact reasons that we were talking about here in this video. That price was pushing up into the market bias, that we would be setting a stop loss if price pushed and held over $120. You're going to see that if we set that up, that is going to give us a stop loss of about 5%, but a take profit at least back at $100 of 12%. That's a 2.44 RVR, which is not the best. But I'm expecting really a drop back down into this golden zone of $96, which is a 3-to-1 risk versus reward. This will usually play out about 60 to 70% of the time, so 3-to-1 is more than fine when it comes to 3-to-1 RVR is more than fine when it comes to risk management standpoint. So 3-to-1 RVR is more than fine when it comes to risk management. The biggest thing here is going to be this Friday's candle. We have to see where this BX trender closes as of this Friday. If we can get a higher high like we did back here on Monday, the 13th of May, I believe that we could see another massive rally of about 55% on our hands, just like last time. That would put us at targets somewhere around $140 to $160. If that doesn't happen, if this Friday it closes with a lower low, there's more than a a high probability chance the price will pull back down to $104 and $100. If you guys want to learn how to use all these indicators, I have courses going over them completely for free. The link is in the description. This is called the market bias indicator. The other one is called the BX trender. I have proprietary settings that we put in there. I've spent a very long time with both of these indicators. So if you want to learn how I use these and why we use them so much within our analysis, go check out the courses there. They're completely for free. And if you do want to become part of our private academy, you can trade with me each and every single day. Get access to our Discord community. Links can be in the description. Thanks you guys for all the support. I'll see you tomorrow.